Where does cyber risk fit into the greater risk around security for this globe? And Greg's commentary was, I ranked the concerns around security, number 1, China, number 2, cyber, Russia, terrorism. And the question, of course, is interesting. Why is cyber at position 2? And maybe that's the intro. Greg, thank you and welcome.
Thank you. It's a great pleasure to be here. Aidan has stolen my lead, which is great.
Sorry.
As he said when I was at the NIC, I did make cyber at least number 2, and cyber and China have a lot in common in any case. So it's very much up at the top of my agenda as I thought about issues. It also seems to me to be a fascinating and difficult issue for lots of reasons. Technologically, it's difficult, but it involves a public-private relationship of the sort we really haven't seen before. All of the stuff we care about, the infrastructures, is in private hands, but there's an overwhelmingly powerful public interest. So ordinarily that would say, okay, a big government role, heavy regulation, but that's not a way any of us want to go, because we understand that the technology is moving so fast here that any regulation runs the risk of being overtaken by events immediately. So we have this paradigm that says how we protect things we care about is we regulate and then we insure. But that can't work here. So what we're searching for, it seems to me, is new forms of public-private relationship that will provide insurance with lots of information, improve their information base so they have some sense of the risk they're carrying, and then provide at the same time incentives for private corporations to both protect themselves better and maybe seek insurance. So it's really trying to find, for me, a kind of surrogate for an old paradigm that can't work in this area, can't work as it does in housing or electricity or earthquake insurance. So it's a fascinating, in that sense for me, public-private relationship. 2 other comments really by way of introduction to Carl and Kelly. One is that because it's so hard and because we have difficulty thinking about the right focal point, in my government and others I know about, what we've done is drifted toward making the SIGINT service, in our case NSA, the sort of principal, not just government, but in some sense the principal societal or public agency charged with trying to help not just the government, but also the private sector. And we start in the United States with, I think, a legacy that's probably unhappier than yours, that the IT people, the original IT people, spent their lives trying to get the government off their backs. So they're often of 2 minds about the government. The only time I saw my boss, Jim Clapper, the Director of Intelligence, angry was we were talking to somebody from Google, and this fellow from Google was making perfectly right, in my view, assertion that the task for the government was not protecting .gov, but .com. And Jim said, well, you tell me that 3 days a week, and the other 2 days you say, get off my back. So we have that legacy we're still working our way through, but I think we're making some progress. Finally, let me just give you an observation that frames my way of thinking about this. I did some work before I went into the government last time with Nassim Taleb, the Black Swan man. If you haven't read The Black Swan, it's a great book. But his other main set of ideas I find interestingly relevant and provocative in this realm. He talks about fragility. He says, we think the opposite of fragility is robustness or durability. He says, no, the opposite of fragility ought to be anti-fragility. Now, obviously not everything is anti-fragile across a wide range, but by anti-fragile he means things that positively get improved by being bounced around. And obviously nothing is anti-fragile across a very wide range. If companies have too much turmoil, they go out of business, but a certain amount of competition and turmoil typically makes them better. And so that's the idea. It's become my watchword for lots of issues, including this one, where we tend to think in sort of remediation ways, and we need to, patching, the metaphor, but trying to think of ways to make us, if not anti-fragile, at least fragile, less fragile. That seemed to me to be the task in front of us. The other thing here I conclude, the other thing I like about that notion of anti-fragility is often in public policy, I spend my life doing that, when there's a problem, we tend to think of how can we fix it? How can we fix it? And usually fixing it means trying to fix it like a broken plate, putting together the status quo ante. Well, the whole anti-fragility notion reminds us that mostly that can't happen. Then once something has happened, we can't fix it like a plate. We may be able to turn the new state of affairs in a very good direction, but we're not likely and probably shouldn't imagine that we can fix it like a broken plate. Let me stop there.
Yeah, no, thank you, Greg. One question to move to the question around insurance. You've been here with us for this full week, Canberra, then Melbourne, and now in Sydney. Your impressions over that last week around the sophistication of the conversation around cyber and cyber risk and security in Australia, maybe in comparison to other nations you've visited and seen?
I've been impressed. I think it's pretty sophisticated. The conversation you mentioned, Monday night in Canberra and others we've had, it's been really pretty sophisticated. And I particularly like the emphasis I've heard several times on carrots, not sticks. The counterpart of being skeptical about regulation means we ought to think about positive incentives, not negative. And so things like the Essential 8, other things that have been developed in this country seem to me to be interesting pointers to the future. If you can find ways to give companies incentive to do better by way of protecting themselves, if you could then fold that into the process of setting premiums for insurance, that seems to me to be a very promising kind of path. It does then, as our conversations have suggested, leave you with a worry about the smaller companies that may find this luxury they don't feel they can afford. And it's worth remembering that obviously those smaller companies are suppliers to the big companies, as we found with the Target hack some years ago. So reaching that, I think the real challenge for me is trying to think how you reach to those smaller companies that may feel that they have to self-insure or can't afford to do otherwise.
I think it's a real challenge. I mean, there's a lot of businesses that are more focused on, ensuring that there's enough money for the next pay run for their staff to think about insurance. But let's jump. Carl, one of the things, and Carl's obviously Insurance Council Australia, one of the things that we talked about on Monday night, which I thought was a very interesting observation, was that across Australian business, only 40% of businesses buy some type of insurance cover for the business, whether it's for the roof or something. My question to you, Carl, is, are we sort of dreaming, if we're now wanting to talk about cyber insurance, if our underlying issue was that we've got 60% that aren't even thinking about any type of insurance?
Look, I think we have to continue dreaming, but that figure's remained fairly static for a number of years, and it's a small and medium enterprise figure, so relatively small companies, the $15 to $20 million revenue mark. Above that, there's a great deal of insurance taken out, both self-insurance and corporate insurance. But we do, as an industry, have concerns over that small and medium enterprise market. Whenever disaster strikes, that's the segment of the business community that we have to deal with most attentively. And it's often a very, very uncomfortable conversation. They'll come forward to the government and say, well, we couldn't afford insurance, what are we going to do? And we have to go through the whole process with government again, explaining how things are risk-based priced. So 40% of small and medium enterprise take out cover. Only a fraction of that, let's say half of that, take out continuity or comprehensive continuity cover to continue the income coming in while they're restoring themselves. And cyber risk insurance is a bolt onto that. It'll gradually get mainstream. So if we looked out the window there and tried to put a green pin on every business that has protected themselves all the way through for all calamities, including cyber, you're not going to see too many green pins. The supply is there. They can all access it at a price. It's the demand. The demand's not quite there yet, but it will build over time, I think. And Not unlike every other Western place, it will probably take a very large incident to really spark interest around this. So we've organisations like Marsh can go in and deal with a very sophisticated business and build packages for them. Where we're starting to focus some attention is on that small and medium enterprise. But we're talking to a small group who are in a position to understand cyber risk insurance. They're the ones who have already done the risk management and have protected the building, protected the lines of supply, and now they're getting to a level of sophistication around protecting their systems and their data. So there's understanding there, we'll build over time.
Great, thank you. So let me elevate to that more sophisticated buyer. I'm going to ask Kelly yourself a question. I mean, obviously most of this audience would fall into that sophisticated category. So talking about demand, right? So if I am a business, I want to consider buying cyber insurance. Do you bring alive the demand, let's actually flick to the supply side. Carl says there's supply. Are there asterisks or question marks attached to that supply?
That's a really good question, and the answer is yes.
It sounds like an insurance question, asterisks.
I've said to a few people in this room today that generally most lines of insurance, the policies are quite similar from insurer to insurer. What we've found from a cyber perspective is that they're quite vastly different. So each insurer has brought out a product, but they're vastly different. And the reason behind that generally is that cyber is not tested from a litigation point of view, so definitions are not set, which you will agree with. Definitions are not set, so insurers are doing their best of how they see the risk, but what that has created is that from product to product, they're not comparable, which is a real struggle for us when we go out to the market. We present quotations to our clients. It's very hard to compare the different offerings being put out there. Because they do vary so vastly. So when a client does approach us, the immediate thing that we need to establish with our clients is actually, do they understand what their risk exposure is? That's a real fundamental for us, and the application process does help with that. Insurers have proposal forms, they're not great, we're working on those, but the self-assessments that are out there really help us challenge organisations to firstly identify what the risk exposure is, but more importantly, quantify what that large loss means in the financial impact within the business.
Is there a profile, maybe some common attributes of the customers that are asking about cyber? In other words, what are those profile features of the ones that are more forward here, reaching out to the likes of Marsh saying, help me, I'd like to explore cyber insurance?
The number one question we get is, how can you help us quantify? I think we've worked out what our exposure is, and maybe the privacy side, we hold a lot of data, particularly for financial institutions. When we're looking at the heavy industry side, manufacturers, they're really concerned about that supply chain. So it really does depend on what industry they're in. So the business interruption would obviously be a lot more prevalent to them. So it's really identifying what that is, but generally they come to us and they say, how can we quantify this? The insurance industry has the loss data, so when it goes wrong, how wrong can it go? So that's generally a question we get asked quite often.
Yeah, and I'm not sure this may be a question for Carl or Kelly, how's Australia stacking up in those types of questions if I was to ask the US or other markets?
As in,
how far down the path of cyber adoption are they, around cyber security adoption?
I think we're quite a sophisticated market, particularly and it plays on your comments before. I think that Australian business realise that this is an issue, and they're doing their best to either engage third-party consultants that can come in and help them with cyber resilience. I've been really impressed by the level of sophistication there, but the concerning part is that small to medium enterprise, they really don't have the budget to be able to get those third-party vendors in.
Yeah, I think that's right. I think cyber risk insurance as a portfolio is the fastest growing portfolio for most insurers. We're importing a lot of expertise, particularly from the UK and Europe, to a lesser extent the US. So we're shamelessly going to steal their experience in an effort to answer some of these things that Kelly's coming across. Like how can we start to standardise the terms and understanding of what the risks are, so it's meaningful when people start to compare, without crueling competition in the market. You don't want just one set of vanilla policies out there. You still need that flexibility to build something unique for that business compared to something in a different industry.
Great, thank you, Carl. Greg, I know during this week you've spoken about the challenge around the public-private partnership requirements, the fact that the private sector owns most of the infrastructure that creates the cyber risk. The impact, though, can be much more felt by the public and government at large. A bit of a helicopter comment about how you see that paradigm of the public-private partnership piece folding out, and as you look forward to 5-20 years out, which is some of the work you've done, how do you think that's going to plan out?
Once it's one of the reasons I'm so interested in cyber is because it seems to be kind of the leading edge of what I think will be a broader movement toward maybe even dramatically new forms of public-private partnership. And we're pretty clear that in many of our countries, our existing forms of governance are not working very well. And it seems to me that suggests that there'll be some failures, but that over the longer sweep, there'll be some really pretty dramatic innovations in how we think about public and private. I imagine that in 20 years, if we have this conversation, we look back and say, gosh, those notions of public and private you had then were pretty quaint. Because the other striking feature of as we look forward is the empowerment of individuals and small groups, obviously on the bad side with terrorists, but on the other side, when the Gates Foundation spends more on health in Africa than the World Health Organization, we know we're into a new world where private possibilities are really out there. I don't have any very good examples. My best example so far is really agreements that Uber has made with metropolitan transit authorities in the United States and elsewhere. But that's really only the kind of the tip of the iceberg.
Now, I should say I'm going to open up to questions in just a moment, one or two more questions, but please start thinking about them for the entire panel. Just continuing that dynamic of the public-private piece, one of the comments that's often raised that a business will often take a cyber loss, right? If there's a cybersecurity incident, the business will just simply say, I can absorb a certain amount of loss. It might be 5 or 10% of their profits, and they'll almost just write it off. The challenge is that sometimes taking that type of approach goes at odds with the community at large, right? The actual loss for the community may be much, much greater than that 5 or 10% that they prefer to move on. Protect the customer, look after the customer, and move on. How do you see that playing out? Because that seems to be an increasing challenge as we think about where the risks are.
No, that's a great worry for me. It does mean that what's okay for an individual company, those 5 or 10% losses, when you aggregate across the entire society may mean we're too little protected. Now we're familiar with that. The company that spews smoke into the air is also generating a negative externality. We're trying to do something about it. Our typical way about that is also regulation, but in the climate change area, we've got a little more creative with cap and trade and greenhouse gas carbon taxes. So in this area, I think the first way to go is through incentives. Through incentives, and also I think I put a lot of emphasis on board responsibility. This is in the end a board responsibility, and not one that can be delegated to the IT people. So some combination of incentives and board responsibility seem to me to be important.
And from the insurance sector, again, you're sort of thinking about the financial loss, and I'm going, if I maybe have a really practical example, crypto locker, where there's, or ransomware in general, where there's a payment available to unlock files versus, that might solve that problem for the customer, but creates an industry that thrives on spreading such malicious code. How does the insurance industry look at that dynamic, that a payout in one environment may actually create a bigger issue over time?
It's certainly something that everybody's very conscious of. If your behaviour in managing your claims creates a larger moral hazard going forward, then it's simply not going to be sustainable. Insurers are caught though. There's a contract, there's a claim, it must be paid, it must be met. But that is where we would start to develop a body of evidence, and we might have to then move into a combination of the carrot and the stick to actually get that regulated and dealt with, or you use risk-based pricing levers to incentivise better and better behaviour so that those sort of vulnerabilities can't actually result in those payments. So risk-based pricing is something we live and breathe with here in Australia. If a business has a poor claims history for any matter, you will find that their premium starts to go like that. Until they can demonstrate that they've closed off the vulnerability that's causing so many claims. It's exactly the same with cyber risk insurance. We'll see that as it becomes more and more a standard feature of everybody's policy, if a business is starting to get many claims, the risk-based pricing will give them a very painful signal, and they'll start to adapt. When we see thousands of businesses experiencing the same problem, like the example that you've got there, that's where we'd need assistance from government and other agencies to help collectively close off that vulnerability.
Okay, fair enough. Let me open it up to the floor. Questions from the floor.
My name is Prem. I work for Single Marketing, PublicPrivate.com.
Thank you.
My question was around in terms of the top level leadership in the global world, in the private public enterprise that you spoke about. If the business leaders at the top level management had to focus on something, do you think it should be on more governance or more compliance, or is it more of regulations that we need? What do you think is probably the one thing, if you had to pick, that they could be focusing on for the next 10, 20 years to help us protect our cybersecurity?
Yeah, I would think that they should focus on some ways governance by broad definition, right? Finding ways to sort of get ahead of the problem and get ahead of one of the things I've heard here from politicians is they worry that if there's a big failure, there'll be a big push to regulate, and that'll be counterproductive, bad. So in that sense, I think trying to anticipate, stay ahead, take some leadership. It's interesting to notice in my country that with our government in such terrible straits, private sector leaders have been much more outspoken, saying we've got to do this. We've got to care about climate change. It's not going to go away. It's important. So I think that's, whether you call that advocacy or governance, that seems to me to be the most important way to lead in this area.
David.
A question for Kelly Carl. There was a very interesting moment in one of our conversations earlier in the week where we were discussing cyber insurance, and the directors and officers insurance was raised. It was interesting to me because at that moment Chairman went very pale suddenly, and it struck me that perhaps we can think about cyber insurance being increasingly embedded in existing policies where it's a new risk that affects parts of the business or people in the business who we already understand and insure, as opposed to starting to attempt to think about creating this new form of insurance organically, separately. Do you have any thoughts on that?
I'm happy to jump in first. Look, it's a great point, and it's sort of coming at the demand problem from a different end. So instead of looking solely at what am I protecting, what will my revenue loss be, it's placing a greater obligation on those who are running the company to have considered it and to have made sure that it's occurring. So we are seeing changes in that environment where D&O covers are starting to include that. But generally most D&O covers do cover a broad range of risk management failures in there. So provided that the plan further down is demonstrating that it's got cyber risk and cyber security as something it's trying to manage, your D&O cover is already encouraging that to occur. Is it explicitly thought of? I like most people in the room here, I probably sit on 2 or 3 boards of different organisations. And in the last 2 years, it's started to come up infrequently, but it's started to come up where it hasn't before. So I think, we'll have top-down leadership on this slowly evolve and get better. The questions will be asked by a board. Are we covered for this? What's happening? How are we protecting ourselves? But that's got to be met with the bottom-up approach of saying, here's how we're doing it, and bringing it to the board's notice that, what the risk is and what they're doing about it, and perhaps what additional resources they need in order to close off some of those risks.
And I will be clear, a D&O policy does cover cyber risks. It covers any management issues relating to the running of the company, and cyber risks is one of those. So unless the insurance industry turn around and put an actual specific exclusion on there, the cover is there so you can sleep easy for the board of directors out there. But I do get asked often why traditional policies are not extending to cover cyber risks, and there's a number of answers to that. The insurance industry isn't that agile, and it takes them a little bit of time. They've got their own insurance to worry about as well, so reinsurance. So they have treaty requirements, and the treaty requirements at the moment certainly do not allow for the traditional policies to extend to cover cyber risks. Another reason is that the insurance industry has looked at it, and at this stage they believe they've come to a landing that they think it's best dealt with under a standalone policy, because when we're looking at property, when we're looking at liability, we're not really, in the underwriting process, we're not really deep diving into what the security is, what is the IT infrastructure, and I just think it would get too complicated if we were. So at the moment the landing is that a standalone policy, and these policies have been tailored to plug the gaps of what those traditional policies are not covering at the moment. And they're unique in nature because they're both first party and third party policies within the one, which you wouldn't normally see in insurance. So first party is obviously your own costs, and then any financial implications to any of your clients or customers, so the third party as well.
Thank you, Kelly. Other questions from the floor? Please.
Yeah, just on public-private partnerships, so I work in healthcare, and within Australia, both federal and state governments seem to be under the understanding that cyber risk is vastly mitigated if it's kept within Australian shores. But I think from a technical perspective, we all know that cyber risk doesn't really look at country boundaries. Is that something that's common in the rest of the world, where maybe governments do feel that keeping the data within its shores means that the risks are mitigated? And what do you think can be done to educate the governments maybe on the actual risks?
Certainly there is that temptation, and therefore no surprise that there have been lots of successful hacks in the healthcare area. I suppose that's unfortunately the best learning experience, realization that national boundaries in this area, as in lots of others, don't really provide any protection. So it's hard to have to learn that lesson that way, but there's also a temptation to think, well, healthcare is good, and who's going to do something bad to something good? Those are both temptations that unfortunately need to be overcome.
I think a lot of the conversation comes down to, based on where your data or your IT system environments reside, dictates which common laws apply.
Yep.
And I think the challenge is in Australia, if it's Australian data that's residing in Australia, you know what the common laws are. We've got strong privacy rules here. You have strong recourse back to the legal system if something goes amiss. That doesn't necessarily apply around the world. And even some of the most first world countries have often very low privacy regulations in comparison. We're very much up the top. So I think common law is where a lot of that comes in. Clearly some regulated industries. Again, the conversation in Canberra, a lot of that was about to be honest, the ability of regulatory authorities to access records and information to undertake their investigations, whether it's an intelligence investigation, a regulatory authority one, and the like. And it's been worked through the courts. For those that track it that are in our industry, there's there's a number of cases going through the US courts about whether the US is able to reach in, for example, into Ireland to access data sitting in an Irish data centre, not relating to an American citizen. And while I think many of us might think it through and go, well, it's only Ireland, if all of a sudden we start swapping some of those names, swap the sovereign states, let's say it's China reaching into America, clearly the response would be very different, right? And that's where a lot of the debate is. And given that we're sort of trying to inform the Australian government on the approach, it's about having that educated conversation and just think through what are the risks and the like. That's a good question. Thank you. Any more questions?
I have a question.
Yeah, Andre.
So, Craig, you mentioned the concentration of critical infrastructure. and assets, information assets within the private sector. Is it fair to say that there is on another hand, the world seems to be like falling apart in terms of like the Bretton Woods arrangements and the like the post-war arrangements are changing lots, and you're going from like a US-dominated world into a sort of like a multilateral world where China is more assertive, Russia continues to try to assert something, Europe is a bit jealous, and there's a lot of conflict, cyber conflict starting to arise. Is that something that is, yes, the conflict is starting to become bigger with things like the recent events with the destruction of systems like happened recently in Ukraine, both in critical infrastructure and also businesses having dealings with Ukraine, and how that will affect the insurance market as well.
Big question. Lots of things going on at the same time, to be sure. On the one hand, we've known for a long time that the existing international institutions were probably less and less suited to a world in which there were new powers underrepresented like China, whose voices were under-reflected in those institutions, and also the fact that they're intergovernmental and therefore find it difficult to reach out to these empowered individuals who are critical in looking forward. So that's a set of things going on. I guess I would say that's mostly independent of the nature of the cyber threats we've seen. The big ones have been really all state-sponsored operations. Most of the crime is not, but the big ones have been state-sponsored. I would have said 2 or 3 years ago that we were sort of ambling unevenly towards some rules of the road. Not clear that's true. The agreements we've all made with China about cyber espionage for economic purposes, good beginning, good start, but we're a long way from some kind of rough rules of the road. And in any case, those rules are not going to include countries like North Korea or Iran. So I've been impressed by relatively unsophisticated capabilities in the North Korean case, but still, managing to do a lot of damage and embarrassment to Sony. So it is a very, I think, uneven picture with lots of things in motion at the same time.
Can I just extend that thought? Because the conversation we had last night was around the need for cooperation between the various sovereign states on this cyber front. And I guess as governments all around the world are very inward focused, right? Both here, I mean, think about what's happened in politics this week. How do we regain that leadership, that global leadership that we coordinate together on this cyber front?
Again, I think it's probably going to have to be driven by the private sector, not the public. We hope that public sectors will be interested. Certainly the various set of public institutions in the United States, they're all interested in being more cooperative. All of us have to sort out exactly what the lanes in the road are within our own countries. I sometimes quip that wanting to reach out to the states and localities and a private sector for these purposes, we have 3 governmental institutions. One is DHS, which has the mandate, no capability. Another is the FBI, which has capability, no mandate. The third is the Director of National Intelligence, that has neither capacity nor mandate. That's a quip, but it does show that we have on the governmental side a lot of difficulty sorting out lanes in the road, and that, I think, has made it hard to engage the private sector in ways we would like to. One of the themes of our conversations, as you know, has been the models out there to share information among companies and then across companies with the government sector.
And I know I shared with Greg, I had the opportunity to be part of the Australia-US Cybersecurity dialogue this time last year, and the number one thing that came around the sharing bit was the private sector is actually genuinely happy to share as long as they feel like they're getting something back.
Absolutely.
And that's the challenge that was the common theme there. They don't feel like they're getting anything back. They feel like it's a one-way. I tell them, full stop, and it goes silent. And it's interesting to see that the US is trying to work out how to organise itself within government. We've got the same stream happening right now here in Australia. We've got lots of agencies thinking about this intelligence, about the cyber piece. And it's like how best, I think the analogy is a great analogy. How do we identify those lane markings so we know where we operate? More questions from the floor?
A couple, Kelly. I was at a similar session last week, but it was with a smaller group, and they were more kind of medium-sized customers. So I agree with your comment around, they asked the floor how many had, cyber insurance, and possibly only half of them had it.
That's good.
Had even heard of it
Oh,
as well. So it was a bit of a wake-up call for all of us there, because they were talking about phishing and whaling and kind of what's going on with all the CryptoLocker type stuff, right? It then led on to some of the IT managers getting pressure from HR around training. And what are they doing about awareness and training at the moment for security awareness training? Because I've worked for large organisations, globals in the past, and every 3 months or every year we'd be sent the link and we'd have to do the security awareness training, right? So is that now a growth area for you?
Absolutely. So we talk to a lot of our clients and help them. We believe 50% of the issue is internal. Certainly from the breaches we're seeing from an insurance perspective, human error, also malicious intent from within is an issue, but culture is everything. It is that human error element that we're seeing most of the insurance claims from.
Insurance covers the human error.
Absolutely does.
Okay, it does.
Yeah.
And then the other thing you talked about, one was awareness and the other was budget. You said that some of these do have buildings and contents and supply chain and income protection, but just curious, how much, let's say price, show me the price, but how much does it really cost relative to the other insurances, or is it based obviously on the risk profile, the size of the business, etc.? It's just, is it really expensive, that's why they don't buy it, or
no, it's not, because the application process is difficult for a lot of the smaller organisations. The proposals aren't easy to answer. They're very broad. They ask quite broad questions that are really difficult to say yes or no, and we find that when it comes to a proposal stage or an application stage, that's where the roadblock is. So once we get to quotation stage, I would say 90% of our clients would take the insurance policy out because it's compelling enough from a business perspective, but it's actually getting to that point. And it's not just, it gets into IT, and IT can answer the security side, but there's a lot of other questions, and it will come down to, are you doing training within the organisation? So that goes back to HR.
Yeah.
And then what data do you hold? So that goes to the Chief Information Officer. So it kind of gets lost within a business, and it's something that we're really focused on, and we're spending a lot of time trying to get all of those people in the one room so we understand what the requirements are and help them complete those application forms.
Sorry, that's a very good point though. Like generally it all falls downhill to the IT manager. The CIO goes, it's your job.
Yeah.
So, this is very interesting. It's something that I need to take back. But I always have a big problem pushing uphill what we need to do. The business understands that this has to happen, but the dotted line sort of disappears in the ether. So what would be the best advice you could give to actually get this on the table and actually properly acknowledged?
From our perspective, it is talking to management or directors and officers, because the buck lies with them to make sure that this process happens and to organise having everyone in the room at the same time with your broker. It's the only effective way we've found.
And price?
It's really a powerful mindset that says, it's so easy to say this is an IT problem or a security problem, but it's really a business problem in some ways right there at the top.
I did try to avoid price, but I'll come back to it. That's okay. There's not a lot of consistency, and I'm sure that you might nod and go, okay, here we go. But there isn't a lot of consistency with the underwriter's approach, so it's really hard for us to benchmark, and there's not enough policies out there for us to be able to do it. It really does come down to risk profile. You'll be surprised from a cost perspective, if you've got pretty good cyber framework, it's not that much of an expense to an organisation. It's not exorbitant.
Right. Okay.
Can I ask the question about, in Australia we have mandatory disclosure laws kicking in this coming year, February 18. So if you lose your customers' records and you fit into a certain criteria, you need to make that public statement, or you need to tell those users that you've lost their record. Does that change the insurance paradigm, for good or for worse?
I get asked that question a lot. We've obviously had the Privacy Commissioner in place for a long time, and he's had a lot of best practice rules out there. Voluntary notifications have been around for a long time. We did expect there to be an uptake, particularly in interest. as well as people taking out policies. But no, we've been very surprised that hasn't really increased the volume of inquiries. I suspect, and I said it to a number of people in the room, that in January next year we'll be inundated because people will be. That's a 2018 problem, we'll wait till it actually comes in.
Yeah, I think the first big set of fines and splashed across the Telegraph, that's when we're going to see a great deal of interest in how to do that. We are seeing some full service options start to come into the market from the US and the UK, targeting that exact scenario, so monitoring you for intrusion, doing the investigation, running the whole recovery process, even layering in some crisis management for you if that's an option that you want to take on board. So, but as Kelly said, it hasn't taken off yet, and I think that's because nobody's burnt their company to the ground by losing a whole bunch of data and getting fined. But there'll be somebody, hopefully nobody in this room, but somebody will do it, and that's when I think we'll start to sell a lot of policies, won't we, Kelly?
Good.
Just an extension on that, and we're sort of covering, but what should we be considering for insurance in terms of loss of data? Generally, within a business, and even in small and medium businesses over the many years, there's always been focuses on redundancy, business continuity, disaster recovery. So generally the loss of data isn't internal, it's more the impact of someone else having your data. Is that something, or what are the impacts of that that we should be considering, and what's insurable?
I can sort of answer that at a generic level, and then Kelly might have some more precise words, but look, I think what you're talking about there, if I had to compare that to what the average business owner or business operator is going to be talking about, that's far more sophisticated than most people are thinking. A lot of businesses just aren't doing basic risk management around their physical assets and their lines of income, let alone valuing their data. So they might be backing it up somewhere and consider that's enough. I think this is going to come to the fore in people's thinking when we have that first major incident, when there's personal information involved. And we'll start to see a flurry of work around, probably starting off with guidelines, mandatory guidelines about how to protect data, some kind of standardisation system out there, which will help with the problem that Kelly's talking about, the application process. So in the built environment out there, insurers, when they're looking at houses, they really only are interested in one question: what's the year of construction of the house? Because from that, they can determine a whole range of attributes about the property. They understand what standards were at play at the time, what the vulnerabilities were. Translate that into the cyber environment, and you can see that you probably have to have something far more nimble and agile at play, but you might shorten the application process to when was your last review done, what standard system do you have? Is it AAA? Is it CCC? Is it something like that? And I think from that, you will start to see businesses find it easier to do the risk management process and understand not only why they should be protecting their data, but how they can and how easy it is to, which flows through then to insurance. We're able to offer a quicker, smarter price.
Yeah, and we've got some tools, not just Marsh, it would be all brokers out there that can help our clients identify what is sensitive information, and then we've got some analytic tools behind that can look at the severity and frequency should there be a breach and what those financial impacts can be on clients. So there is a lot of data that we've pulled together, and it's come from overseas as well as being Australianised, but I think you'd be surprised at some of the tools that are available for you to help you establish what that is.
Well, you think of the crypto locker, that has a serious impact on the internal part of the business where the business might not function for a period of time. And talking to the guys from William Hill about losing systems for a period of time has an impact of a monetary amount for the business. But thinking of where data's copied and duplicated, such as stolen credit cards, how do you define what the value to our company is if someone else just has copies of credit card details?
Yeah, look, and insurance, there's no right answer to that, but the insurance response is that they will, there's a lot of studies out there to say what a record is worth. Currently, I think the last Poneman study was $139 per record, but insurance policies will also kick in to do credit monitoring for up to 2 years of each of those records that are taken away. So the monitoring is there, so it's trying to stop the fraud happening, and after 2 years they generally think that risk has gone away.
Okay, well, thank you. Greg, are there any comments you think we haven't covered?
No, I think we've said a lot.
We've said a lot, okay. Well, please thank Greg, Kelly and Carl. Thank you. If you didn't get to ask your question, feel free to come up at stage now. Otherwise, thank you very much for joining us. Believe it or not, in case you didn't have enough to eat, there actually are some desserts on your way out. But again, thank you. Enjoy the rest of the day.
Thank you.